John Williams is speaking today at the Economic Club of New York, and he's practically listening to this conversation. He says the current funds rate of 2.4% puts us, quote, right at neutral. Why is this important? Well, Williams is one of the top three policymakers, I'd say, at the Federal Reserve. You have the chairman, the vice chairman, Clarida, and then the New York Fed president. That troika, I guess you'd call it, are the big three. And John Williams practically wrote the book on what the neutral rate is. So he says, expect growth to slow considerably this year to 2%. Why? Because labor force and productivity growth have both slowed, and he doesn't see those two factors changing anytime soon. He says some of the tailwinds from 2018, which gave us that stronger growth, have reversed. They include global growth, the fiscal stimulus, and accommodative financial conditions. Those are blowing the other way right now. Trade negotiations, he says, listening in on this conversation you guys were just having, those concerns loom large, and he also refers to Brexit. Tighter financial conditions this year will restrain firms and consumers. But he says, don't be alarmed. Slower growth, he says, is, quote, the new normal we should expect. He says the economy right now about as good as it gets. And he points out low unemployment, sustainable growth, and inflation right around target at 2%. I just cannot believe how many elements of what was in that speech were prior mentioned here. And he's like, yeah, just don't.
What about
that?
Atlanta Fed today ratcheted up by 0.2 to 0.5% the first quarter GDP. Did anything like that come up in any conversations?
No. This is a speech that Williams is about to give right here. What I'll tell you is that our CNBC rapid update is running at 1%, but we don't have everybody weighing in just yet. Those who have weighed in are below 1%. It's going to be a weak first quarter. We know that, and the question I think to focus on right now is the second quarter to me, because we know first quarters are weak, usually not as weak as it looks like it's going to be right now. We're going to follow the data. Not a lot of data is in. I don't put a lot of stock in the early Atlanta Fed numbers because they move around according to some survey data that's not part of some of the other stuff.
Some don't put that much stock in the early, middle, or late.
Right. Atlanta Fed.
I didn't say that, Scott, but I'm not going to disagree with you.
I'll say it.
How much of the first quarter weakness is attributable to weather? We've had just massive weather fronts all throughout the country.
I think that's a part of it. I think some of the seasonal stuff kind of expects there to be weather, so whether or not it's more or less than it was last year is something that we're going to have to watch for. I think that's a piece of it, but the weakness right now comes off the strength, I believe, the unexpected strength of the fourth quarter.